Welcome back to AlgoBot, where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host from AlgoBot, and in today's session, we're exploring an expert advisor called Count Backline Pullback. It's an automated take on Daryl Guppy's classic count backline method, a purely structural way of timing a trend's resumption after a pullback finishes. Over the next few minutes, you'll learn how the line is built from the swing itself, how the entry and exit rules fit together, and how the code turns that idea into a running EA. Remember, this is educational content only and not financial advice. Let's dive in. So what does this expert advisor actually do? Count Backline Pullback is designed to rejoin an existing trend at the moment a pullback appears to be finishing. Rather than leaning on a smoothed indicator that lags the price, it constructs its trigger directly from the market's own structure. That trigger is the count backline, a level measured by counting successive new extremes as the move rebuilds itself, step by step. The strategy uses two supporting tools. A slow exponential moving average, with a default period of 100, defines the trend regime. The EA checks both where price sits relative to that average and which way the average is sloping over a short look back. On top of that, an average true range reading, with a default period of 14, measures current volatility, and that volatility figure is used to size the stop-loss distance, the take-profit distance, and the break-even move. For a long setup, the EA first finds the lowest low over the recent look-back window. That low is the bottom of the pullback and becomes the structural risk anchor. It then walks forward from that pivot, counting bars that each print a new higher high than the last counted bar. The high of the third such bar becomes the count backline, when a freshly closed bar pushes decisively above that line. With a bullish body and the trend regime in agreement, the long is generated. The short side is a mirror image, working from a pullback high and successive lower lows. Because the pivot is a recent extreme, the stop sits close to the entry, which keeps the risk on each position modest and clearly defined. This approach may appeal to traders who prefer clean, rules-based structure over discretionary judgment, and who want their entries anchored to visible price behavior. It's well suited, in an educational sense, to liquid instruments such as major foreign exchange pairs, metals, or indices, on time frames from 15 minutes up to 4 hours. As always, trading carries risk, and losses are part of the process. Let's walk through the exact logic, one condition at a time. Everything happens on a freshly closed bar, so there is no repainting and no acting on an unfinished candle. The first step is the pivot. For a long, the EA scans the last 20 bars. That's the PivotLookback default, and marks the lowest low. That low is the base of the pullback and becomes the structural anchor for the stop. The second step is the count. Starting from the pivot bar, the strategy walks forward and looks for bars that each set a new higher high than the previous counted bar. It needs 3 of them by default, the count bars setting. The high of that third higher high bar becomes the count backline. Think of it as the market proving, step by step, that the resumption is genuinely underway. The third step is the trend gate. The slow exponential moving average must be sloping upward, measured over the slope lookback of 5 bars, and the just closed price must be trading above that average. Only when the broader regime agrees does the EA consider an entry. The fourth step is the entry itself. The bar that just closed must be the fresh bar that pushes above the count backline. Specifically, the previous bar was still at or below the line, and this bar closes above it by a decisive margin, that margin being the break buffer times ATR. The bar must also have a bullish body, meaning it closed above its open. Because only the crossing bar qualifies, the EA avoids chasing a move that's already extended. Now the risk controls. The stop loss is placed just beyond the pivot low, with an extra cushion of stop buffer times ATR, 30% of an ATR by default. Since the pivot is a recent extreme, that stop stays close. The take profit is set at 3 times ATR from entry, giving a roomy reward relative to the tight structural stop. 2 more protections run while the trade is open. A break-even ratchet pulls the stop to the entry price once price has advanced 1 ATR in favor, so a winning position isn't easily given back. And a trend flip exit closes the position early if the regime moving average turns against it. The short side simply mirrors all of this, working from a pullback high, successive lower lows, and a downward sloping average. Let's read the code the way you would in MetaTrader. At the top are the inputs. PivotLookback sets how far back the EA searches for the swing pivot. CountBars, defaulting to 3, is how many successive new extremes define the countback line. TrendPeriod and SlopeLookback control the slow-moving average and how its slope is measured. ATR period sets the volatility reading, while break buffer, stop buffer, and take profit multiplier all scale their distances by that ATR. Break-even ATR governs the break-even move, and lots is the trade size. Now the long block. The Boolean called fresh break is true when the countback line exists, the previous close was at or below it, and the just closed price closed above it by the margin. If that's true and the bar also closed above its open, meaning a bullish body, the EA reads the ask price, places the stop just below the pivot low minus the stop buffer, sets the take profit at 3 ATR above entry, and calls trade.buy. The short block is the exact mirror. Fresh break is true when the previous close was at or above the line, and this close pushed below it by the margin, with a bearish body. The EA reads the bid, sets the stop just above the pivot high plus the buffer, targets 3 ATR below, and calls trade.sell. Notice both sides derive their stop from the pivot and their target from ATR, so risk is always structural and consistent. Let's walk through this illustration candle by candle and see both a long and a short play out the way the code actually reads them. The blue line running through the chart is the slow trend EMA, our regime filter. We open on the left with a strong bullish candle. Price is trading above the rising EMA, so the trend regime is pointing up, exactly the environment this strategy wants for a long. On the second candle, price pulls back sharply and prints a fresh low. That low is the deepest point of the pullback, and it becomes our pivot, the structural anchor the EA will hang its stop on. Now watch the count unfold. The third candle rebounds and sets a higher high than the pullback bar. The fourth candle pushes to another higher high. The fifth candle, the tall bullish one, sets a third higher high, and the top of that bar becomes the countback line. That's 3 successive higher highs, matching the count bar's default of 3, the market rebuilding its uptrend one step at a time. The very next candle is the moment the strategy has been waiting for. It closes decisively above the countback line, clearing it by the break buffer margin, and it closes above its own open, a genuine bullish body. Price is above the rising EMA, so every condition agrees, and the buy entry marker appears. Notice the stop loss sits just below that earlier pivot low. Because the pivot is a recent extreme, the stop is close, so the risk on this trade is small and clearly bounded. From there, the two candles that follow push higher, riding the resumption. As price advances 1 ATR in our favor, the break-even ratchet quietly lifts the stop up to the entry, protecting the position. Price then reaches the take profit marker, set at 3 times ATR from entry. That's the asymmetry this strategy is built around, a roomy target against a tight structural stop, roughly a 3-to-1 reward-to-risk shape in this example. After the long completes, the character of the market changes. Price rolls over, the EMA flattens and begins to slope down, and price slips beneath it. Now the mirror image sets up for a short. Price bounces into a local high, and that high becomes our pivot for the down move, the anchor for the short stop. From that pivot, the count runs in the opposite direction. The next candle prints a lower low. The one after sets a second lower low. And the candle after that carves out a third lower low, whose bottom becomes the count back line for the short. 3 successive lower lows, the downtrend rebuilding itself step by step. The following candle is the short entry. It closes decisively below the count back line, with a bearish body, while the EMA slopes down and price sits beneath it. The sell entry marker appears, and the stop loss is placed just above the recent pivot high, once again keeping risk tight and structural. Price then works its way lower across the final 2 candles. The break-even ratchet trails the stop down as the move extends, and price reaches the take profit target 3 ATR below entry. 2 clean, rules-based trades, each anchored to visible structure rather than guesswork. So that's the count backline pullback expert advisor. We covered how the strategy finds a pullback pivot, counts successive new extremes to build the count back line, and then enters only on the fresh bar that closes decisively past that line while the slow EMA agrees. We saw how the structural stop sits just past the pivot, how the ATR target aims for a roomy reward, and how the break-even ratchet and trend flip exit help manage an open position. Everything here is for educational purposes only and is not financial advice, a recommendation, or a solicitation. Trading carries real risk, and losses do happen. If you found this breakdown useful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with what you'd like us to cover next. Learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.